Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, January the 8th, 2018, and this is the Daily Report for Gold and Silver. With a stronger dollar today, we did see the precious metals backslide a little bit, at least gold and silver. Gold closing down fractionally lower, down $1.10 at $13.21.20. $17.16 is the closing price of silver, putting it down about 12 cents. And as I said, about a 0.4% rise in the dollar, back over 92 at 92.09. Now, the Dow did close fractionally lower, but both the S&P and the NASDAQ had highs today, and of course that would create a new record high for both of those indexes. And we had the Bitcoin market itself stabilize really right around 15,000, with the Chicago Mercantile Exchange Bitcoin futures at $15,005 and the CBOE at $14,850. Traders, gold is trading modestly lower today, off about $1.20, closing at $13.21.10. This basis most active February's futures contract. But what is interesting, in the last 11 trading days, beginning with this candle here, when gold pricing first broke and then closed above the 200-day moving average for the first time since it broke below it back at the beginning of December. From that point forward, we had consecutive higher closes, for the first 4 days breaking above the 50-day moving average and culminating with 11 consecutive days in which the market traded higher. And that, traders, is pretty much an all-time record because, as pointed out in an article in Market Watch, this 11th day on Friday, that is this red candle here, actually beats the longest consecutive day move on record, which occurred in 2011 by a full day. And traders, here's where it gets interesting. I have just brought up the actual point in time that article is referencing. Here is the 10 consecutive days of higher pricing that occurred beginning of July 2011 when gold was trading roughly at $14.80, and the consecutive rises which took us up until about $1,600 occurred over 10 trading days. So we broke the record by one. But what is more interesting is that this rally here that occurred in 2011 was a precursor to a small period of consolidation and a second and third leg of this rally that would culminate with gold trading to its all-time record high at $1,920 per ounce. More interestingly is when we convert our daily chart into a weekly chart, we can really smooth out this data. Let's go ahead and do that. And when we do, we can see that that consecutive 10-day period occurred over a 3-week time span. But if we look at the weekly charts, which of course will smooth out the data, we actually had 7 consecutive weeks of higher pricing, meaning a green candle. And a green candle, of course, is where the market opens on Monday and closes higher on Friday. That's what would give you the green candle of some sizable length. And that entire rally took gold pricing from approximately $1,480, call it even $1,500 per ounce, up to $1,900 per ounce. In other words, a $400 move. And so what we have to ask ourselves is, since this is the first time we have seen the occurrence of that many consecutive higher closes, will we be witnessing something similar to what we saw back in 2011? Which tells us that, at least historically speaking, traders, we are really at a rare moment in time in which we have seen the market move in this particular manner with this number of consecutive higher closes. Now, the market is certainly consolidating. We can see that by the fact that we do have somewhat of a rounded top in the market. Now, gold is only trading off by about $1 at this point, so we're not getting a ton of selling pressure, but we are certainly getting consolidation, which beckons the following question: will history repeat itself? And the answer is, in my opinion, it's highly unlikely. But history does repeat itself every once in a while, and we have the first setup for a potential move for higher pricing, and that is a vast number of consecutively higher closes, and we are currently consolidating very slightly and not really selling off. If the market is able to hold near these highs, we could be forming a base in this area before moving to higher ground. Therefore, my recommendation is to maintain our current long position, which sits in nice profit now at 1265, and although our stop is sitting at around 1300, we will look to move that up, and we're going to move it up based on highs and lows coming in the market. We typically want to work off of a 3-day low. That follows into about 1307, so we can move our stop below that. But if we get one more day of a tight range and a higher low, we'll want to move our stop to just below 1315. And traders, for those that are trading silver either in conjunction with their gold trade or alone, we have noticed some similar topping activity in which we have some real resistance coming in at around 1730, 1733. We also have this red candle showing a slight correction today with silver trading off about 12 cents. It is certainly, in terms of percentage drawdowns, much greater than what we are seeing in gold. We currently have recommended that stops sit below 17, so no stops have been hit, but we have had a low that came in at around 1707. My recommendation for silver is to maintain your long position, maintain your stop just below $17. And traders, lastly, I do want to take a look at Bitcoin futures. Bitcoin futures have been interesting in that much of the extreme volatility, the tremendous price swings that we witnessed when this futures contract first opened up, trading up 15 to 20,000 in a single week, then in a couple of days dropping down to 11,000, then back to 1650, somewhere around there, 16,000. We have now seen the market attempting to form some sort of a base, very slight activity to the upside in Bitcoin today, and my sense is that it is still forming a base, and once we see some sort of an upside bounce from here, we can say with some certainty that we will be looking for higher prices. Of course, there's a caveat in that any break below these recent lows that came in right here would signal a return to lower pricing as low as 13,000. Traders, throughout last week and in the opening letter today, our topic was about comparing a point in time in history in which we had as many consecutive rises as we've witnessed over the last 11 days. From December 11th through Friday, we had a total of 11 consecutive higher closes. That is the most consecutive closes on a daily basis on record. We compare it to a point in time in July in which the market moved 10 consecutive days of higher pricing. But the real story behind all of that comparison is following a consolidation in 2011, the market ran to 1920. Will history repeat itself? Well, honestly, the probability is very low that it will. But once in a while, history does in fact repeat itself. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update, and bye-bye.